Okay, I'm going live in 8. Good afternoon. This is Jo Burston, the CEO and founder of Inspiring Rare Birds. I'm very, very thrilled this afternoon to host this deep dive mentor webinar with Alan Miltz. As you know, Rare Birds has a critical mission to create, support, and promote diverse and inclusive workplaces where opportunities in entrepreneurship and leadership exist for everyone. There's 4 key programs at Inspiring Rare Birds. We have a world-renowned mentor program for both SME, SMB, owners and entrepreneurs, plus corporates who are seeking to advance themselves through the leadership ladder in their organisation. We host a quarterly mastermind group for small groups of peer-to-peer individuals to help them grow professionally and personally through the experiences of each other. We have a vast education and networking community, which consists of webinar events and usually face-to-face events, which hopefully will resume post-COVID-19. To date, we've activated 17 locations across Australia, both remote, regional, rural, and in the cities, which has enabled thousands of women to connect, to be educated, and to help each other through their journey of entrepreneurship, small business leadership, and corporate leadership. We also have a free online community portal, which we're going to send you a link to after this webinar, and you'll be able to sign up for free. Of course, we've always been free, to connect with like-minded women and individuals who hopefully can help solve some of your problems throughout your journey as an entrepreneur. When I talk about cash flow and I talk about the crisis of cash flow at the moment, I've received literally hundreds of phone calls and messages about best practice. And I thought the best way to overcome this problem for our community was to bring in the big guns. And so today I wanted to introduce you to Alan Miltz. I've known Alan for over 10 years, originally meeting him as an expert presenter at an entrepreneur's event on cash flow just post the GFC. At that time, my first business, Job Capital, was only a few years old and was scaling very quickly. In fact, I was quite out of control. After spending 3 or 4 hours in Alan's session, I walked away with fistfuls of gold nuggets. It was by far the first time anyone had really spoken to me with clarity about the true value of cash and the value in my business. I remember Alan saying over and over, cash is king, and it rang in my head so hard that day, but it has for years later, and it still does. For those that have not met Alan before, he's a co-author of the Verne Harnish book, Scaling Up. He wrote the financial component of this book. As founder in Matrix, Alan developed financial analysis techniques that have become a global standard for businesses, CPAs, and banks. These techniques are now being used in 30 countries by over 20,000 customers and leading banks, including the Big Four in Australia. In the USA, Alan has about 300 banks who he's implemented his techniques to review company performance. Alan has also assisted many Australian companies to successfully raise debt finance from the major financial institutions at over $1.4 billion today. Alan is the founder of Cash Flow Story. That's www.cashflowstory.com. Alan is on the board of 15 prominent companies in Australia and Asia, including the chairman of Pearl Financial Services. That's pearlfinancial.com.au. Alan has been a keynote speaker at the Forbes Growth Summit in Amsterdam, Moscow, and Bucharest. It's really easy for me to say that, hand on heart, it was the first person I reached to when I thought about cash flow. I'm going to hand over to Alan to take you through the next 45 minutes of gold. Get your notebooks open and ready, but I can assure you post-event we'll be sending you a recording of the webinar plus a key one-page sheet of all the takeaways that we've put together for you. You'll also be given access to Alan's online platform for free for the 3 months post this event, which you can take advantage of, but you'll learn more about what that is and how to use it during his seminar. So Alan, welcome to Inspiring Rare Birds, Optimising Cash Flow in a Crisis. It's absolutely my pleasure to have you.
Thanks so much, Jo. So let's hope my technology works. Okay. Now, Jo, your introduction was amazing, but I'm going to make one change. Cash is queen.
Oh, love it.
Okay, so we have to say cash is king or queen today. So as Jo said, I've dedicated my life to making numbers simple. And never before has the topic of cash flow been more important to us in business. I'm getting phone calls by the hour, and every call begins with cash, cash, cash. So in the next 45 minutes, I'm going to give you a foundation of how you can start to understand the numbers and develop techniques that can help you in the business. So as Jo said, every technique I'm going to provide to you, we are going to donate our technology for the next 3 months to enable you to implement all the concepts. So if you go to this website, you'll be able to download the software at no cost, no strings attached, and built into the software in the Learning Center. I have also recorded a 30-minute video, which will give you a summary of every technique I'm sharing today. This is what we're going to learn. How to create a one-page scorecard. Your accountant is giving you 30, 40 pages of reports. No one understands it. If I'm going to be successful, I need to take off my shoes as an accountant and put on your shoes as a senior management person and talk to you with empathy. So I cannot speak to you in financial terminology. So on one page, I will tell you how to review your company. And the story will consist of 4 chapters. There are 3 cash flow measures I look at every month. Probably today we'll have time for 2. Once we understand your cash flow and your story, the next area is improvement. The power of 1. How many 1% changes do we need to make in our business? The future is very different to the past. Projections and then stress testing our projections. It's a practical presentation, and I've chosen a case study, an actual company in Melbourne. I've changed the name, but every other word, including the industry, is correct. And the reason I chose this company is I will never need them. As you can see from my photo, I'm completely bald. So Mylock is an importer of hair care products. They supply hairdressers, beauty salons, and pharmacies. They employ 55 people. Until COVID hit us in March, we were doing well. So the first thing we're going to do is go back to December and have a look at the Mylock group. Revenue had grown by 12% from 21.5 to 24 million. Operating profit is up by 22%, 1.8 to 2.3 million. Operating profit for the accountants, we call that EBIT. What is your profit before interest, tax, dividends? That's the KPI of a management team. And after interest and tax, Mylock is ecstatic with the 1.5 million profit. As Jo said, revenue is vanity, profit is sanity, cash is king or queen. This is the way all of you look at your company. Mylock says revenues up by 2.5 million. Every period, our margins are improving. Every period, our profitability is improving. Ladies and gents, I'm going to ask you a question with absolutely no tricks. What is the cash flow of the Mylock Group in the current period? What is Mylock's cash flow? We've made 1.5 million profit. Now, if I had more time, I would ask you to submit your answers. The accounting profession has complicated cash flow that nobody understands it. Cash flow, in reality, is the easiest concept to understand. If you start the period where you've got 10,000 cash in the bank and you end the period with $1,000 left in your bank account, every person on this Zoom call or this call would say to me, my cash flow has got worse by $9,000. Cash flow definition number one. After everything has happened, it's called net cash flow. What is the change in my borrowings plus cash at bank? So every single week, in every board meeting, every management meeting I attend, one of the measurements that is given to me is the movement in all the bank accounts. So if we look at Mylock, cash at the bank has had no movement. Short-term debt has reduced from 3.1 to 2.8 million. That's good. Our debt has come down by 300K. And my long-term debt has had no movement. So if I said to you, what is the net cash flow of Mylock? My answer is net cash flow is the movement in all bank accounts, positive 300K. And my dear friend Vern Harnish, who wrote the book Scaling Up, in every one of his talks says the traits of a good leader is the ability to predict, the ability to delegate, and repeat, repeat, repeat. And every key concept I'm going to go through today that's important, I will repeat it over and over again. So the first technique you've learned today is net cash flow. What is the movement in all your bank accounts? Ask your CFO every single week, what is the movement in all your bank accounts? And that is your net cash flow. A pretty easy number to calculate. Now, all of us love the profit and loss. It is so easy to read, but the balance sheet is very difficult to understand because it's full of terminologies to confuse us. The accounting profession has got so many different terms in the balance sheet. Accruals, prepayments, provisions, deferred tax, other current assets and liabilities. Today, you're going to realize that the profit and loss and balance sheet are equally important. We have to make it simple. So let's just go through some of the key things we've learned already. Never before has it been more important for you to understand your numbers. You and your management team are going to be making decisions internally and externally that are going to impact your company. You have to understand the financial story. And as I said, revenue is vanity, profit is sanity, cash is king or queen. Cash flow definition number one, net cash flow. This is the KPI of the CEO. This is after everything's happened. And as I said to you, after everything's happened, I want to know at the beginning of the period, what are all your bank accounts? Mylock's got $4 million of debt. At the end of the period, Mylock's debt has been reduced to 3.7 million. Mylock, your cash flow is the movement in all your bank accounts, positive 300,000. And then I said to you, your profit and loss and balance sheet are equally important. We need to understand the balance sheet. In the same way, we understand the profit. Now, your balance sheet can be explained in one sentence. Remember, when I'm talking to management teams in a board, these are the sales people, the marketing, the operational people. They've got no clue about the numbers. We've got to make them love the numbers. And they've got to understand with equal importance your profit and loss and balance sheet. So the balance sheet, when I explain it to people, is a one-sentence equation. Funding equals operations. Funding is either through debt or through equity. Operations, so let's have a look quickly at the Mylock Group. In the Mylock Group, debt plus equity is my funding. My equity is in your balance sheet, $4 million. What is the debt of the Mylock Group? They've got 1 million long-term, 2.8 million short-term, that's 3.8 million, less the 100,000 cash in the bank. Mylock's got 3.7 million of funding. Therefore, your balance sheet has to balance. Operations has to equal 7.7 million. But we need to be a little bit more granular. Operations can be explained in two components. Operations consists of working capital. Your working capital consists of your accounts receivable plus your inventory, or in a service company, we call it work in progress, the amount of work you've done but not yet invoiced, minus the amount you owe your payables. So in the Mylock Group, they've got 5 million of receivables. They've got 3.2 million of inventory, and their payables is 3.5 million. Mylock, your working capital equals $4.7 million. Receivables plus inventory or work in progress minus payables. Your balance sheet has to balance. It has to equal 7.7 million. That's the funding of your company. The rest of your balance sheet, I call it baggage. It's made up of a myriad of terms that your management team have got no control over. Accruals, prepayments, provisions, etc., etc. I call everything else, which will obviously equal 3 million, other. And I call it other capital. And in Mylock's case, a simple business, it's made up of one item, $3 million in a warehouse. So that is in one sentence. I said to you, I can take the most complex company and I can explain it in one sentence. And the sentence is funding equals operations. Debt plus equity is working capital plus other capital. Now, I said to you earlier, cash flow is not a difficult concept. It's the movement in all your bank accounts. So if I can see my one sentence equation, at the beginning of the period, Mylock had $4 million of debt. At the end of the period, Mylock's debt has come down to 3.7 million. Mylock made positive 300,000 in cash flow. Or putting on a funding perspective, my funding capacity from the bank has come down by 300. My debt's come down by $300. Mylock also made 1.5 million profit. So if you can see, in the previous period, our equity was 2.5 million, plus my 1.5 million profit, ending up with $4 million of equity at the end of the period. Now, this is what people don't understand. Your balance sheet has to balance. Mylock, you've made 1.5 million profit. You've repaid the bank 300,000. Mylock has therefore got 1.2 million, which has been spent in the operations of the company. If I'm running a company, I want to know, where did I spend the money? So if we look again at the financial statements of Mylock, where did Mylock spend his $1.2 million? Well, receivables has grown by $1 million. Inventory has increased by 700, and my payables have increased by 500. So in other words, my working capital has grown by 1.2 million. That's where Mylock spent their money. Funding equals operations. Debt has come down by 300. Equity went up by 1.5 million, which is the profit. Where did I spend my money? I spent 1.2 million in working capital, and the rest of my balance sheet other has not changed. So if you said to me, Alan, explain to the non-financial people what's going on, in one sentence, I can explain to the non-financial people in the balance sheet. Non-financial people, you're responsible for the profit and you're responsible for the balance sheet of this company. Over the last 12 months or over the last month, we had a brilliant profit. We made a profit of 1.5 million. We reduced our debt by 300,000. The funding of this company has increased by 1.2 million. Where did we spend our money? In our working capital. And we spent zero in the rest of the balance sheet in other. So what am I trying to do in every board that I work with or every company in Australia? I'm trying to help them make more money. Cash flow is the result of a business. Your management team is responsible for profit, and your management team is responsible for working capital. Working capital, repeat, consists of 3 items: receivables, inventory, or work in progress, and how we pay our suppliers. If I want to make more money, I've got to grow my profit and shrink my working capital. Every single management meeting that I'm having, and we're having them weekly at the moment in many organizations, we're going through what can we do to reduce the cash burn. In other words, what can we do to grow our revenue, if possible? What can we do to have better margins? Can we purchase more effectively? Can we provide our service more efficiently? Better utilize your people. Every line item in your profit and loss, where can we manage your overheads? What can we do to follow up customers who owe us money? Let's phone them before the money is due. If we are a service company, try and invoice more frequently, invoice in advance. Go to your suppliers and renegotiate your terms. Repeat. If I want to fix cash, it's a combination of profit or loss mitigation and working capital efficiency. That's all we can do unless you're going to sell off some of the assets in your company. I said to you, you've got to take off your shoes and listen to people with empathy. A story is told over 4 chapters. Chapter 1 is your profit. Every person in this presentation understands profit. And Mylock says revenue, margins, profits up. We made 1.5 million. Chapter 2 is equally important. Mylock, you spent 1.2 million growing chapter 2. Mylock, you didn't spend any money in chapter 3. Can you now see why you've made 300,000 cash? Your management team is responsible for chapter 1 and chapter 2. Ladies and gents, or ladies, you cannot read a book. Your business is no different to a murder mystery. You cannot read chapter 1 and expect to find the murderer. If you read chapter 1, you will never know chapter 4, your cash flow. It's got to be a logical process. And this is what I show to a management team. Chapter 1, we made 1.5 million. I'm very happy with that. Well done. Chapter 2, we spent 1.2 million. I've got a problem. Chapter 3, nothing happened. Can you now see, management team, that why we only made 300,000? If our working capital only grew by 900,000, I would have therefore made 600,000 cash. So what we got to do is teach people the story. Repeat, repeat, repeat. Make it simple. People will make better and faster decisions. So as I said to you, a story of numbers is told over 4 chapters. Profit, working capital, other capital if applicable, resulting in cash flow, and quickly to calculate cash flow, it's the change in all your bank accounts. Now, the banks in Australia and globally are helping, accounts. The banks are helping business at the moment. Eventually, you're going to have to repay the bank. This is what people don't realize. We business speak Spanish and your bank speaks Portuguese. It sounds the same, but it's different. Currently, what's happening is you business are speaking about Chapter 1 profit, and your bank is speaking about debt service capacity. Do you have cash flow to repay them? You will never understand your bank if you speak about profit. You will understand the bank if you implement the 4 chapters. Chapter 1, profit. Chapter 2, working capital. Chapter 3, other capital, resulting in Chapter 4, cash flow. When a bank is worried about you, it means you don't have cash to repay them. You better go to the bank with a solution using Chapter 1 and Chapter 2 as techniques to improve your cash. If the bank is worried about you, you should be worried about you. The bank is looking, and the bank knows your cash flow every day. It's the movement in your bank accounts. You should be as concerned about your business as the bank. And as I say to every company today, debt plus equity is your funding. The bank's your partner. Treat the bank as a partner. The worst thing you can ever do to your partner, the bank, is give them a surprise. You need to show the bank that their money, Mylock of 3.7 million, is in a safe set of hands. And you've got cash flow in the future to enable debt service capacity. Okay. In all likelihood, your company has been severely impacted by the virus. Your management team has a critical role to play. In all the boards that I sit on, I've created a war room. The war room is your senior management team. The first thing I'm doing in my war room is I'm running my management team through financial training. They need to understand cash. They need to understand the 4 chapters. And your war room consists of sales, marketing, operations, finance. The team needs to understand how they impact cash, and I suggest the team meets weekly. Cash flow measurement number 2. This is the KPI of your management team. Your management team is responsible, repeat, for your profit and responsible equally for your working capital. Now, within profit, the number that your management team is responsible for, so if we go back to the financial statements, the number that your management team is responsible for is that number there, operating profit. What is the profit before interest and tax? Mylock, brilliant job, 2.3 million. Your management team is equally responsible for the 3 items in your working capital. And Mylock, do you realize you made 2.3 million operating profit, but your receivables grew by 1 million, your inventory has grown by 700, suppliers have given you 500,000 help, your working capital has grown by 1.2 million. So even though you made 2.3 million operating profit, your working capital change has been 1.2 million, Mylok. You've made 1.1 million operating cash flow. So let me go over this again. I'll show you again. Repeat. Your management team is responsible for your profit and responsible for your working capital. Management team, you've done a brilliant job in profit. You made 2.3 million profit before interest and tax. But management team, you've been quite lazy in your working capital management. Your working capital grew by $1.2 million, even though you've made 2.3 million operating profit. Chapter 2 is stealing money from chapter 1. You've only generated 1.1 million operating cash versus 2.3 million operating profit. The difference is your movement in your working capital. Is this good or bad? And this is what I'm teaching my war room. Cash flow is the result of growth. Mylok, you grew your revenue by 12%. Normally, people need money when they grow, and they also need money when their business is going backwards. But cash flow is equally impacted by your management team. If your management team doesn't understand what they're doing, and I'm saying never before has it been easier to get rid of non-performing people in your company and replace them with A players. And A players, by definition, want to be winning. You've got to teach them the score. A players have got to know the rules of the game. The rules of the game are how to make more profit and how to have better working capital management. Because if they don't understand that, for example, prices go down, bad for cash. Collect slower, bad for cash. Inventory going up, bad for cash. Or invoicing slower than before. Overheads growing too quickly. Collect faster, excellent. Pay suppliers a little bit slower, good for our cash flow. Prices go up, good for cash. So when I sit down with my management team, I'm saying to them, ladies and gents, let me show you what's changed in profit and working capital. Mylok, revenue went up by 12%. Margins improved by 0.75. However, Mylok, do you realize the overheads have grown by 12% and revenue only grew, the overheads have grown by 15%, revenue only grew by 12%. Why are you growing the expenses quicker than the revenue growth? Why are you collecting slower than before? Why is your inventory climbing? I'm happy we're paying suppliers a bit slower. So if I convert this into dollars, management team, you are responsible for cash because you impact the quality of the cash flow of the company. You've done some good things, but you've also done some bad things over the period. Margins growing, excellent. Paying a bit slower, good for cash. Overheads growing too quickly, bad. Collecting slower, bad. Inventory growing, bad. Do you realize, management team, our cash flow should have been 780,000 better? If we would have not had these wastages, we would have made more money. So in other words, management team, you are responsible for operating cash. Operating cash, repeat, is your operating profit, 2.3 million, minus the change in our working capital, 1.2 million. You made a 1.1 million operating cash. But management team, you've made some bad decisions over the last period. Our cash flow should have been 780,000 better. I've got a major problem when I'm sitting in the board of a company and we are not generating enough cash because of bad management. So what do I do? Remember, you've got to make it simple. This is how I do it. I could ask any of you in the room today, tell me what your profile should look like. So Mylock says to us, if I'm running my business properly, my margin should be 40% and my profit should be 12. I should be collecting in 60 days, holding 50 days of inventory and paying suppliers in 60 days. Cash flow is the result of growth and management. Management will either do a good job, an average job, or a bad job. So good, greater than 40% margin, that's a green, that's excellent. If your margin is between 37 to 40, I'm going to give us a yellow. Go below 37, a red. So collect quicker than 60 days, green. 60 to 70 days collections, yellow. Go above 70 days, it's a red. I can then every single month look at Mylock and show them what's green, yellow, and red. Mylock, you made 1.5 million profit after interest and tax. Do you know why your cash flow wasn't big enough? Because you're running the profitability in color code yellow and you're basically running your working capital in color code red. All of us have been to London and caught the underground. When you got off the train, a beautiful announcement was made which said, mind the gap. I'm saying to all of you today, mind the gap. Mylock's got 2.5% gap in their margins, 2.5% gap in their profit, 16 days gap in collections, 28 days gap in inventory. If I was working with this company and I attended a board meeting, I would want the management team to give me strategies to move in the right direction. Whenever I see a color code yellow or a red, I want the management team to give me a mitigant. What are we going to do to improve this? Your management team is responsible for your profit and your working capital. What I'm going to say now will be the most important 10 minutes of education you will ever get in finance. And this has taken me 25 years of my work to come up with this most simple concept. I'm going to go straight to the power of one. Management team, you're responsible for the profit and you're responsible for the three items in working capital: receivables, inventory or work in progress, and how we pay suppliers. There are only 7 things a management team can do. There are 4 levers in profit, and there are 3 levers in working capital. So in the technology which I'm giving to you for 3 months at no cost, the software will calculate the next screen for you, the power of one. In Mylock's company, what do the 1% changes in profit and the 1-day changes in working capital do to your cash flow and your profitability? So Mylock, put your prices up by 1%, your cash flow improves by 190,000. Your profit improves by 240,000. Increase your volume by 1%, you'll make 43,000 cash and 90,000 profit. Now, how can you ever allow your salespeople not to know that relationship? Salespeople are, for example, we're going to give a 2% price discount and our volume will go up by 5%. Well, that is not a good outcome because price in this company is 5 times more sensitive than volume to cash. So when I'm looking at a business, I want to know the biggest bang for the buck. What is the gap we need to solve? So in Mylock's company, they had a 2.5% gap in margin they needed to fix. Well, every 1% is worth 147,000 cash. Mylock's got 16 problems in collections. Well, every day was worth 65,000. Mylock's got 28 of these problems in inventory. One day's worth 41,000. If all Mylock does is change a 1% or a 1 day, it will improve cash by 594 and profit by 547. Every person listening today will have 1 or 2 opportunities. So when I'm running meetings, this is what the company might decide. In this particular period, put prices up by 2% and collect 7 days quicker. Well, that will have an 840,000 cash and a 480,000 profit impact. This is how to run this workshop. 8 sticky notes. Put the 7 levers down the side of a screen, a whiteboard, whatever, and then give to your management team, the 4-chapter team, the war room, yellow sticky notes, and workshop every single lever. Where can we get price changes? Which products, which services? Get the suggestions for every single lever. So for example, in overheads, line by line in your profit and loss, look at every single line item. Where can we have improvements? How do we collect faster? Do we set credit limits? Do we start to phone customers a week before the money's due, for example? You then place them on the board and you rank them from most to least sensitive. You would then choose the top 1, 2, or 3 best ideas for the period, and that becomes your power of 1 implementation. So let me go to cash flow story and just show you how to get started. I'm not the best with this technology, so you've got to excuse me. And I'm assuming you can see my cash flow story screen. Joe, do you want to just comment? Can you see it? I'm assuming you can see the screen. Let's just check. Okay. So when you start off the system,
Sorry,
can you see it? Okay.
Yep.
So when you start off, this is the first screen you'll see. If I click on stress test, I would suggest you start off with your last year of data, your last 12 months. And I'm going to enter 6 numbers. It should not take you more than 5 minutes to find these numbers in total. My revenue, let's say it's $2 million. My margin, 1.2, and let's assume the sample company is going to make 200,000 or 10% profit. Receivables, 500,000. Inventory or WIP, 300. Payables, let's assume 200,000. I've entered 6 numbers. I then click on next, and the system gives you your power of 1. I've now got my power of 1 for this particular company. I would then sit with my management team and I would work out the changes we can make. So for example, this might be the management team says we're going to be smashed by the COVID crisis. What if volume's going to come down by 50%? What if people are going to pay us 30 days slower? I can then see straight away what will be my cash flow impact by these changes. I will then look at other levers and say, what can we do to mitigate this cash burn? If we pay suppliers, let's say 20 days slower, and let's say I reduce my overheads by, say, 30%. Well, I'll only have 120,000 cash burn. So that is what you will get. The other thing is when you get the software, the Learning Center. I've embedded in the Learning Center videos which will summarize what I've said today. You can play it over and over again, repeat, 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 until you understand the concepts. Let's now go back to Mylock because the world has now changed. Assumptions of the past no longer apply. So Mylock was doing okay until March, but we're going to get absolutely massacred in the June quarter. So this is what Mylock does. They prepare the March actuals, the quarter, and this is a projection for the June quarter. So Mylock says revenue will come down from 4.6 million to 785 because most of our distribution channels are shut. Mylock has probably not been aggressive enough. I've got a red flag that they haven't reduced overheads enough in that quarter. And Mylock's budgeting for a $1.3 million loss in June. Mylock says, I better go to the bank. How much money do I need? Well, the first thing I've said to you is that in one sentence, funding, debt plus equity is working capital plus other capital. So I know I'm going to make a $1.3 million loss. My equity will come down. The balance sheet has to balance. Mylock says, how am I going to fund this loss? Can I have a mitigant through better working capital management? So Mylock says the reality is my revenue is going to be very small in June, and most of my customers are closed. I'm probably only going to get a reduction in my receivables by 200,000. Because my revenue is pretty small, my inventory will come down by 300. And Mylock is getting massive pressure from their suppliers to repay them. So Mylock, with a bit of ignorance, says I'm going to pay 500,000 off my suppliers' accounts. Mylock's going to get zero benefit from working capital, and Mylock is not prepared to sell any of the other capital. So Mylock's going to get no help from working capital and no help from other. The only way Mylock can balance the balance sheet is to borrow 1.3 million through the bank. But the bank might say to us, Mylock, no ways are we prepared to give you 1.3. Maximum we're going to give you is $1 million. Mylock will now have to stress test their assumptions using the power of one. So Mylock looks at his numbers and says, we're going to improve our overheads by 20%, which will have a 317,000 impact, and we're going to pay our suppliers 20 days slower. So Mylock, if you implement these two items, that will reduce the amount you need to borrow from the bank by about $400,000. Mylock can go to the bank and show the bank the assumptions that they're going to have in both the profit and the balance sheet to only require, in this case, less than $1 million. As I said to you, your bank is your partner at the moment. You've got to demonstrate to the bank that you understand cash. Cash flow, as I said to you, is the movement in all your bank accounts. In simplistic terms, the power of one is the code of your company. The 7 levers, and this is all your assumptions in your business: price, volume, cost of goods or direct costs in a service company, overheads, receivables, inventory or work in progress, and payables. You need to play out the likely scenarios for your bank. What's going to happen? You need to then amend your forecast. Show the bank how long you can endure a subdued performance. And then, obviously, the bank needs to realize that your strategy makes sense. When good times return, your business will start to boom again. We need you, our partner, the bank, for a short period of time. This is the cash flow hole that we're going to happen. These are the 7 power of one assumptions that we've put into our business. I started today and I said revenue is vanity, profit is sanity, cash is king or queen, and I'm going to end the same way. So Joe and Rare Birds, thank you so much for inviting me. Let's now open up to some questions.
Thank you so much, Alan. I think, the lessons that you've refreshed me with today were, I think, the lessons of about 10 years ago. And what I know is that really nothing has changed when it comes to the roles of management and people in your business that are responsible for moving those levers and moving those dials. And in particular, one of the things that stood out to me many, many years ago was the power of one, and have practiced that extensively through the business, particularly on collections and particularly on pricing as well. So often I'll say to salespeople, I want you to increase the price by 0.75% or 1% or 1.5%. And I guarantee you the customer won't notice.
No idea. Firstly, we're normally charging GST. So we think we've got to round things. Everyone says, I'm going to sell it for $13. It's rounded. But when you add GST, it's no longer a rounded number. I'm going to make a statement, Joe. This is not in my notes. Write this down forever. Price is a gift that never stops giving.
Yes.
Price is a gift. Trust me, nobody knows the difference when you put your prices up by 2 or 3%. It gets lost, and it increases your cash, it increases your profit, and it gives you a multiplier uplift in your valuation.
Absolutely. One of the things that we did, Alan, very early on in Job Capital, which was my on-hire labour business, was traditionally in the industry, organisations or clients would be giving us 30-day terms to start the business. And I'd call the CEO and I'd say to the CEO, look, we're a bit of a startup. We can't manage 30 days, but we could probably manage 14. And they go, oh, okay, well, we'll set you up at 14. I mean, that 14 days stayed there. All of a sudden we're 16 days lower than everyone else. And then I thought, I'll get a bit sassy with this. So the next client I called and said, well, we can't manage 14 days, but we could probably manage 7. So how about if we work on the basis of 7 days? Obviously, delivery has to be exceptional. We worked over a period of time and I kept pushing the boundaries where now we have clients that are on COD. And we invoice them in advance. So they're receiving the invoice before the service is provided, but paying us on COD.
Absolutely. It's teaching, but your management team, everything I've done today has got no accounting terminology. It's all, anyone can understand the 7 levers. If you forget about everything I've said today, the power of one fixes everything.
Now, I'm looking at the chat. Is there any questions that anyone has for Alan before we go? There's a lot of information there. I love that it's all in layman's, and you will receive the information post the presentation, obviously as a recording of the webinar, plus the 3 months of free subscription. I know sometimes it's a bit tricky to ask money questions in public, but nobody else can see your questions if you do want to ask a question. And by the way, to have Alan here live and answering these questions is in itself a gold nugget for you. He's in demand all over the world. He's doing these presentations back to back in every country on the planet at the moment, as you can imagine. So please make use of his next 5 minutes before he has to run off and probably present somewhere else in the world.
And Joe, I'm actually presenting in China next, so it's quite interesting.
There you go.
Normally I'm wearing my suit every day. Now I'm wearing my tracksuit. So it's actually beautiful. I mean, the one positive thing about this COVID crisis is your ability to work at home and to help so many people. So I'm seeing some names who have sent in messages here. If it's the same Jem Hart from New Zealand, I'm happy you've learned. Jem got the cash flow right, which is brilliant. And Roger Boland. Roger was ex-ANZ, so
So I guess one of the questions I'm going to ask you then, Alan, is that often people in sales have a hard time connecting what they're doing with how it affects the balance sheet. How do you open those conversations?
Well, I'm saying to the salespeople, you are responsible for price. So if you look at the power of one levers, price, volume, and accounts receivable days, that's where the salespeople can impact your cash flow. So I make sure every salesperson understands the price-volume relationship, and I'll make sure that every salesperson understands that until the money is banked, it's not really a sale. So we got to teach the customers that we'll give the best product, the best service, but we've got certain rules.
So it's never a deal until the money's in the bank.
Yes.
I agree with you. Alan, how do you think this world glitch of COVID ID will impact business valuations? And that's from Denise Hall.
So normally I do a whole section on valuations. So a valuation is based upon two components: a multiple of your profits. So if you think about those two components, your profitabilities are coming down and multiples will come down. So it'll definitely have an opportunity, but I love problems because Australia and the whole world is going to be on sale. If you would have listened to me, business, for the last 10 years, last 20 years, you would have had a fortress balance sheet. I'm absolutely loving what's happening in COVID because you can create serious wealth during these times if you've got the cash to fund the opportunities. So become cash flow focused. Never forget that. Cash is queen.
Cash is queen. I love it. I think we're going to wrap up for you, Alan. I wanted to say a huge thank you from myself and the Rare Birds communities. And sorry, before we wrap up, Roger's asked a question, so I'm going to get him in before we tick over, Roger. Do you think the banks will be drilling down harder post-COVID?
Well, at the moment, this is the biggest dilemma because the banks are giving money to business because they have to. But eventually, companies will have to repay. So, and the other critical point is cash flow is the result of growth. So when you actually regrow your company, you're going to have to go back to the bank to get money to grow. You're going to have to demonstrate to your bank very clearly, because after every single crisis, the people who control the banks are the credit guys. During boom times, it's the marketing people who run these banks. The credit guys are obsessed about cash. So I reckon after this crisis, the banks are going to be meticulous in their credit process. You need to show the bank your power of 1 or 7 lever assumptions when you're applying for money.
So you really have to go in there with your tools sharpened.
Absolutely.
Yeah. That's all for the questions, Alan. I'm just about to say thank you so much. It's been such a pleasure having this session with you today. I appreciate your time and energy to the Rare Birds community. You know how precious that is to us, and we do hope to see you again. Good luck to those who have been stuffing their money under the mattress, because there's some great opportunities coming up. And for those that need the help, of course, please jump on to the free link that Alan has been so kind enough to provide to you for the next 3 months. The recording will follow this session and a 1-page takeaway sheet. We look forward to seeing you at the next presentation, which you'll also receive a link to with the survey for this presentation. Thanks for taking the time to do the polls. It was really interesting. Thanks for all your questions. And like I always say, just put your head down and focus.
Thank you, everyone.
Thank you.